How do you avoid these extra costs from these mistakes? Us as passive property investors, there's no counterparty between us and our investment. We control it. It's like if you went to like a property investment fund and they took your money and then borrowed it up a lot and bought a bunch of bad properties and then it goes down. Well, you don't get access to those properties. You're just in that fund. Investing in property as a passive investor, it's the best way to invest. If I were to impart any advice from the mistakes that I've made, it would be, welcome to the Passive Property Investor Podcast, where I teach you how to stop trading your time for money with property investment. I'm Jerry Parker, your property investment consultant. Let's dive in. Hey, welcome back to the Passive Property Investor Podcast. It's Jerry Parker here. I'm going to talk to you some more about investing in property as a passive investor, which I think it's the best way to invest in property. I think you make more money as a passive property investor over time than you do by buying and selling or, trying to outsmart the market or flipping. I think to be a value investor. And, here's how I learned that. I've definitely made mistakes that if I would go back, I don't call them mistakes. I call them learning. It's just life. But if I could go back in time and I would have changed some of the things that I did, here's what I would change. My history is going back to, I'm an American and I was a backpacker at one stage. And then I worked on, that's when I met some Australian girls. But anyway, I worked in New York City as a trader. And so I learned a lot about money, what money was and how fungible it was and what's a commodity money is. And that taught me a lot. But then, I did meet a girl in Australia and I quit my Wall Street job and I moved to Cairns chasing her. And that was probably the smartest thing I've ever done in my life. But then I ended up in a place where I had no skills, no ability to do anything. I didn't have a trade. I had a degree in history and I had to figure things out. And my father was a property developer. So I sort of knew a little bit, real estate could be my thing. And so I started selling real estate, commercial real estate. And that was not very well. And I got to this one point, I was so frustrated that how am I going to perform? How am I going to make money in this new country? And I can't do anything. And I was just thinking back to the Wall Streeters, if they have a problem, they just buy their way out of it. They just buy it. And I thought, well, I'm going to be a Wall Streeter. I'm just going to buy my way. If I need some property, I'm just going to go, whatever it takes, I'm going to buy it. And I had been doing rep on site in a land subdivision, and I got the developer there to let me build a house on a block of land. And my wife inherited a house from her grandfather and used the equity in that. Who was the Australian girl that I came back to Australia for? Best move I ever made. But then we got enough for a construction loan. And I built that first house on land that was not even mine. It was the developer's land. And then I sold the house, and I remember I made $30,000 on that. I went, oh my God, this is it. And so I kept doing that over and over. I was a rep on site on the land, commercial real estate sales. I was terrible at that during the week, and then buying and selling houses. Over time, probably 35 houses. And then I went into apartments and sold all those. And then I rolled into building coffee shops for cash flow because I needed more cash flow to do more property developments. And here's the mistake I made. Everything worked out well, but I sold everything. And then I paid tax on the money that I made. And I was aspiring to be a property developer, which was very risky for someone who has no money. And I should have saved. I should have just kept 20% of the houses that I sold. And so if I would have kept, 10 houses, they were only cost me about $250,000 at the time. They'd be worth $800,000-900,000 each now. And I would have made more. I would have more money now than I did by all this trading. So that's, if I were to impart any advice from the mistakes that I've made, it would be you have to keep investing for the long term. As a passive investor, you'll make more money in your passive investments, earning money for you over time while you sleep than you will ever be able to work for. Here's another mistake I made, and this is why I like the passive property investor. We're making direct investments into property, and we are owning that freehold land, and we control it completely ourselves. I've made the mistake of investing with investment management company, and they were investing in property and shipping, had cash flows, and everything that they invested in looked really good. It was a good investment, had great track record over time, but it was not direct investment. It was an investment into another company that was making the direct investments. Then we had a period of a big banking crisis, and a lot of corporations were in trouble, and I couldn't liquidate the assets because he controlled them. Was not directly invested in the assets. It was in this company. And then so the company goes down. And this is this thing called counterparty risk. And I didn't measure the counterparty. I thought I was investing in these assets, but I had a counterparty between me and the assets. When us as passive property investors, there's no counterparty between us and our investment. We control it. It's like if you went to like a property investment fund and they took your money and then borrowed it up a lot and bought a bunch of bad properties, and then it goes down. Well, you don't get access to those properties. You're just in that fund. As with us, we are direct property investors. We own the assets directly, and that reduces risk. This is a big lesson that I learned, and I won't make that mistake again. Other mistakes that I've made that even some of my clients make, and this is a common mistake, that I was building it was a commercial site, and I'd bought it from an oil company, and there was contamination in the ground, but they'd cleaned it all up, and all the reports were there. And I went to go build a commercial building, but they never put the cleanup reports into the council. So the council still had it as a register as a contaminated site. And then so I have to go in and spend a lot of money to get new soil testers in, new engineers in there to go find the contamination. But then they couldn't find the contamination. They said it's not contaminated. But the council says, oh, yes, it is. It's contaminated. And that held up my project for 6 months. And that was just a mistake. And my clients make mistakes like that too, is sometimes they'll go like, oh, Jerry, no, I found a block of land that's cheaper than the one you showed me. Look how, and it's even bigger. And they go ahead and buy that block of land. I go like, well, now it's cheaper for a reason. It's very slopey. It's got a bad soil test. It's going to cost an extra 30 grand to fix that. And that's what we wanted to avoid. We want the flat blocks, easy to build on. And so it was a bit of a $30,000 mistake you made as the investor, because you're not going to get extra rent for that $30,000. We'd rather have be more efficient in our investing. So those are little mistakes that can be made along the way without doing proper due diligence and without a bit of experience. Experience helps you avoid common mistakes. It's never a smooth ride for anyone. It's an entrepreneurial pursuit, but it's what we're doing is we're solving problems, essentially. We're solving problems for people who need a place to live, and we're providing them with housing. And there's the reason that they're not building the house is because of these hassles. But when we sort these hassles out, and we get paid for that. If you buy land and build a new house, you're going to pick up 15, 20% instantly because we've solved that problem. These extra costs from these mistakes, a lot of them it's not from the world of academia. You're not going to read an ebook on this. You need to have the experience and the experienced team behind you. And that's the purpose of me doing this podcast, is I'm just sharing, just giving you all the experience that I have. And so to help you not make mistakes, I've done this for like 25 years as an entrepreneur, as someone who knew nothing at the beginning, who's just school of hard knocks, and educating myself along the way. And if I can help you, I want to help you by checking out the previous episodes of the Passive Property Podcast. You'll learn a lot. Hey, and if you want to have a conversation with me, click the links below, send me a message, book a call. I'm here to speak to you anytime. Talk to you soon. Thanks. Bye. Hey, thanks for tuning in to The Passive Property Investor. If you enjoyed this episode, the best way to show your support is give a 5-star review on Apple Podcasts and Spotify. Make sure you subscribe to the YouTube so you don't miss a single episode. We're on all social media platforms, so feel free to connect with me there. And if you're having specific problems making your first investment or building your portfolio, maybe you don't know which location to invest in, how much you should invest, you're worried about who to trust, reach out for me down below. I will have the answers for you. Don't hesitate. See you on the next episode.